Welcome back. In our top business story, Sharjah today invited the leader of Asia's superpower, Chinese Premier Wen Jiabao, to speak about how the two nations can boost their business ties. At events like the 4th China-Arab Business Conference hosted by the Sharjah Chamber of Commerce and Industry, Emirati and Chinese delegates discussed ways to attract more Chinese investments into Sharjah and the whole of the UAE. Not only the oil and gas sector took center stage, China and the UAE want to boost their business ties also in other sectors, like the healthcare or infrastructure sector. Also, increasing trade volumes stood on today's agenda. UAE trade with China grew 38% in the first 11 months of last year to reach $32 billion, according to Chinese customs data.
I think this conference and the visit of the Prime Minister of China to the United Arab Emirates is very vital to the development of the relationship between the United Arab Emirates and China. Of course, for Sharjah, this is endorsed and further supports Sharjah's position as a centric in developing the relationship with growing countries like China, India, and other countries. So today we celebrate this event with having more than 1,000 attendees from China and the Arab world to explore ways of opportunities, of developing opportunities, business opportunities between the Arab world and China. UAE-China trade relation has been developing significantly in the past few years. However, in this visit, the UAE and China signed a strategic partnership that will foster business relationships. So we anticipate that the relationship will only go further and bigger.
Meanwhile, China and the UAE have signed a currency swap agreement worth 20 billion dirhams or 35 billion yuan. We earlier asked Mazen Salhab, financial analyst at Advanced Currency Markets Middle East, on how it can help increase UAE-China business relations.
The fluctuations of the currency are very high in the world markets and very risky right now between dollar and all other major currencies like euro and yuan. UAE is planning to expand their imports and their exports to China, and China as well doing the same. So in that case, they will make a fixed rate between dollar and between yuan and between UAE dirham to protect that export and import. Weaker dollar is very good for the export for UAE, and China as well is looking for alternative source of oil, and UAE is a very good and the second largest hub in the Middle East after Saudi Arabia for China products, which is very important for them. In that case, both can protect themselves from this kind of fluctuations, and yuan, because weaker yuan is very good to keep it weaker as much as they can for their exports to UAE and to other parts of the world.
And let's now look at the stock indices across the GCC.